Well, hello everybody. This is Susan HayesCulleton, and I'm delighted to welcome you to our new show called Savvy Investors at VectorVest. For a start, let me tell you a little bit about what this show is going to be all about, because you're here right at the first episode. Savvy that we'll see in the market, in the economy that affects the market, and that you hear people talking about, whether it's ESG, whether it's technology, or whether it's other things. In addition, I want to bring you lots of interviews with people who you might know and some you might not, so that you can learn all about the markets from different perspectives for people who have got a lot of experience and a lot of insight to share. And of course, thirdly, the reason that we set up the show is because I am delighted VectorVest has given me an opportunity to be able to talk to you about the things that I find really interesting in the market, and some of them don't always get the attention that they deserve. So for all those reasons, we have set up Savvy Investors at VectorVest. You're going to be meeting me, Susan HayesCulleton, every month from now on, where we're going to have lots of discussions. And of course, today we're starting off with a very important topic, which is how to read an earnings report. Now, before we get into the show fully, I first of all want to say hello to everybody, wherever you're joining us from all over the world. I want to thank Joey, our production, the guy who runs everything from VectorVest. He was in looking at everything on my laptop and everything beforehand. So thanks, Joey, for being here. And of course, all of the team that are right behind this show from the very beginning. So as always, I love to start off a conversation by asking you where you're tuning in from. And I am looking at your responses over here. So please do tell me, where are you joining us from? What city, country, what part of the world are you joining us from today? We are, of course, live on the 25th of January. I am joining you from Dublin, right here in my office in Dublin, Ireland, Europe, the world. And I'm just going to check in here to see where everyone is coming in from. Now, it's interesting. I see some people are sending me messages like top of the morning. So a very quintessential Irish one there. Okay, lots and lots coming in here. So I am seeing hello from Miami. Hello, Alberto. You're very welcome. Andrea is joining us from Canada. Callie is joining us from New York City. We have people from Montreal, Belgium, top of the morning to me, Boston, Atlanta, Georgia, Toronto, Ottawa. Katie's joining us from Texas, Fort Lauderdale, San Jose, Alberta, Canada, New Jersey, Arizona, Monrovia in California, Lethbridge, Alberta in Canada, New York, Pacific Northwest, Toronto, Ottawa, Tulare, Southport, North Carolina, Mississippi, Aberdeen in the UK, fabulous part of the world. Hello, Julie. Great to see you. Alaska, Sarasota, Brooklyn, Slovenia, Scottsdale, Arizona, Ottawa in California, Phila, Australia, Maine, St. Louis in Missouri, Tennessee, Chicago, Gala to the Moon, Cleveland, Ohio. So lots and lots of you there joining us from all over the world, and you are, as I say, very, very welcome. Okay, let's begin by me talking you through how I'm going to run this episode. First of all, when it comes to reading an earnings report, of course, what you're going to want to know is who is releasing earnings in the first place. So I'm going to show you where you can find the earnings calendar. So I'm going to show you that in VectorVest. There's other places to find them, of course. There's lots of places to find them. I'm going to show you where I'm going to find them. And then we are going to move on to talking about a company who is releasing their earnings today, namely Tesla. Now, often, like Tesla today, the results will be released after the end of the trading day. So there, as I'm talking to you again, live here at 4 p.m, 4 minutes past 4 now in Dublin, the results aren't released yet. But I just want to show you where you can find the details about that. However, what I do want to do then is to go on and talk to you about the results that were released this week by the biggest company that everyone is talking about, namely Microsoft. And the reason people are talking about Microsoft is they have decided to cut the number of jobs, increase their spend accordingly, while they are making a really big investment in OpenAI, specifically the company behind ChatGPT. So what I'm going to do is I'm going to walk you through how we analyze earnings. So there's three things to look at. So we'll start off with the press release. Now the press release generally tends to be very positive, full of upbeat news, full of language that you know, might be written by people who really want to make sure that investors want to stay on board. So we're going to start off with that. And the reason we're going to start off with that is it often has the highlights. These are the big things that people are talking about. And I'm going to show you how to determine what people are really saying behind the language. Then if you really want to get into the numbers, which we're going to do, we can take a look at the 10Q or the 10K if you're looking at a US company. They are the filings that are required by the SEC. Now, I'm going to show you some of the main things that we look at. I will take any of your questions at all. Now, I am not an accountant. I don't put accounts together. I am a CFA charter holder. That means I'm a Chartered Financial Analyst charter holder. And that means, respectively, that I am an analyst. I can take things apart and analyze them for you. I can get into the footnotes. I can get into the risks. I can get into the numbers. I can get into whatever it is that you need me to. I only have an hour with you today, so I can't do all of that, but I will absolutely get into anything that you specifically ask me about if there's a particular area of interest or if you've come across something on an earnings report that you want me to explain. And then I'm going to get into the transcript. So before the show today, I have been knee deep in the earnings call transcript issued by Microsoft. And we're going to get in there as well, and just to get a sense of what is being discussed in there also. So that's going to be the way in which we're going to run. I'm going to start off by showing you the earnings calendar, moving on then to looking at a press release from Tesla because their earnings are coming out later on today. Then I'm going to talk to you about earnings that have been released and in the 3 sequential patterns with depth as well. And as I mentioned, going to take lots of questions. Of course, if you feel that this content would be of use to somebody else right now while we're live, please do press the share button and share it wherever you feel it would be useful, to your WhatsApp groups, Twitter, on Instagram, wherever you are. Feel free, of course, to tag us at VectorVest. If you want to tag me, I'm at @SusanHayes_ on Twitter. I'm at HayesCulleton on Instagram. I'm at everything, everywhere, really. But you'll find me. You will find me. And also, of course, as well, if you are tuning in where we're not live, please do feel free to put any question into the chat, or into the comment section, and I will be delighted to come back to you on it. One last thing, will you please push the like button? Because we would love if more people were to discover this. And as I was doing my research beforehand, just checking in to see what people are talking about when it comes to this, there's a lot of people interested in getting into the deep dive of an earnings report. One last thing before we get straight into the earnings calendar is this. I was on as a guest on Glenn's show on Monday, the mid-afternoon market update. We ran a poll, and well, Joey ran a poll. I just simply observed and was interested by the result of it. And we ran a poll asking people, how do you know how to read an earnings report? 61% of people said they didn't. So this is something that people are interested in. So please do like it and of course subscribe to the channel, and then we will make sure that other people can find it too. Okay, let's get started. So I'm going to now open up my program. As you can see, I operate on 2 different screens. That's why I will be turning my head sometimes. So what I'm going to do is I'm going to open up the program right here, and here we go. Okay, now how did I find all of these earnings results? Well, first of all, what I did is if you log on to the program and I go to my homepage, for example, and I'm looking at the wrong screen, that's why it's not working. So here is the homepage. This one is of VectorVest US. What I'm now going to do is I'm going to go to viewer, and then I'm going to scroll down over here on the left hand side, and I'm going to see events viewer. Okay, so just going to check in here on what you're all saying to me right now. People are also joining in saying Costa Rica. People are saying hello everyone. VV Nation, and Joey here says welcome to Savvy Investors at VectorVest with Susan HayesCulleton. So I just want to articulate that too. And Brian has said long-term VectorVest subscriber, this has worked well for my investments. Brilliant. And also Fitz says welcome Susan, how do you use the earnings report to examine a company's debt level and how it could affect sustaining a dividend? Brilliant question, Fitz. Brilliant question. I'm only delighted to answer that. So stick with me. And please do keep them coming. If I don't get back to you right away, I will be checking in here. My phone is in between my 2 screens, so I can't do anything but look at it as we're going along. Okay? Now, over here you can see a list of all of the earnings releases that are happening today. So over here, Wednesday the 25th of January 2023. So before we came live today, and of course, because I'm in Ireland, I was awake before the sun was rising at all in the US. So naturally enough, I was going in here and I was taking a look at whose results are out today. And of course, right down here, Tesla caught my eye. So I said, okay, that's the one that I'm going to go in and take a look at. Now, of course, there's lots more. That's tomorrow, and that's Friday. This goes on and so on like that. And naturally enough, if I was to look at any one of our others, for example, this is the European system of any of them. Any of you who are VectorVest subscribers, of course, you know that you have access to all of the databases. Now, all aspects are all databases around the world. So today in Europe, we have ALO.PA, that is a company in Paris. We have Arami in Paris, we have ASML Holdings, traded in both Germany and Amsterdam, and also we have Excel Industries also in Paris. Naturally enough, we have fewer companies in Europe than in the US, that's why the list is shorter. So that's where I find them. Now, I want to bring you over to Tesla, right? So here it is. This is the press release that actually came out on the 2nd of January 2023, and you will see then that as you'll guess here, the press release is, as the name suggests, a press release. So it's generally, like I mentioned, it's full of great results that have happened and all that sort of thing. And of course, that's what it's going to be. But if I just scroll on down here, you'll see that we have some information, we have some data, but in particular, down here we say Tesla will post its financial results for the fourth quarter and full year ended December 31st, 2022, after the market closes on Wednesday, January 25th, 2020. At that time, Tesla will issue a brief advisory containing a link to the Q4 and full 2022 update, which will be available on Tesla's investor relations website. Now, this is always where the key areas of information are, okay? That's where you're going to find them. You're going to find the depth, you're going to find the raw information there. What you won't find is, let's say, analysts' overview. You're not going to find VectorVest's relative safety rating on it. You're not going to find an outside view on the company. But the investor relations is where you're going to find the raw data that analysts like me or companies like VectorVest will be pulling in so that we can conduct our own reviews on it. So as you can see then, the Tesla management will hold a live question and answer webcast that day, 4:30 p.m. Central Time, to discuss the company's financial and business results and outlook. That's what I'm going to discuss with you today from Microsoft. That then is live webcast often, and questions can be submitted, but then there's also a transcript afterwards. Again, that's what I'm going to take you through today with Microsoft. Okay, so moving on there now, I'm just going to quickly check in here. Hello, Peter is joining us from Oklahoma, and Mark is joining us from Ashland in Pennsylvania. You are very welcome indeed to both of you. Okay, so what I'm going to do now is I just want to talk to you about the big story, because we'll get into it in Microsoft. The big point that you're going to see on the press release, the one big thing, if you Google anything to do, ironically I'm using that term, if you Google anything to do with Microsoft, or search anything like that, what you're going to find at the moment is something to do with OpenAI. Now, in the transcript of the earnings call that was had, I noticed that there was particularly what Satya said was the age of AI is upon us. Now, personally feeling, I've been looking into AI for a while, and I've been using it in different aspects for a while. Probably you all have. Anytime that, for example, Microsoft Word, if you're there, speaking of Microsoft, and you're typing a sentence and then the sentence, there's a suggested answer for what or suggested continuation of the sentence, that's AI. If you've been setting up a Google form and you type in a question and then a question type appears underneath, that's AI. If Google Maps has ever suggested to you, are you going in a certain direction, that is AI. There's lots and lots of use cases of AI, but it hasn't been kind of whoa in your face, I don't think, for a while. Anytime that Spotify suggests that you should listen to a certain song, so YouTube suggesting that based on your previous listening, we think that you would like this song, that's AI. ChatGPT though has been, it almost feels like that pivotal moment when people are now saying, oh, this is revolutionary AI. So what I decided to do today for the crack, as we say in Ireland, is that I'm going to show you what ChatGPT can do. Okay, so this is it's OpenAI, right? OpenAI is the company, and ChatGPT is what everyone's talking about. So I'm just going to show you how this works. My husband sent me a podcast to listen to earlier on, just before Christmas. Actually, I was driving to Cork, where I'm from in Ireland. I was driving to Cork, going down to my parents, and I listened to this podcast, and they were describing ChatGPT. And on this podcast, they were talking about, imagine that ChatGPT can write a story. Let's say that you tell it to write 300 words, and it has to be in Shakespearean verse, or has to be as a rap song. And I thought, right, that's a bit far-fetched. But let's put it to the test here live, right? So what I'm going to do is I'm going to ask ChatGPT, because I've logged in here, and this is on a free account, right? So there's nothing paid here. I'm going to say, write an earnings report for Microsoft in under 300 words. Okay, that's the only context I'm giving it. So you can see it there what I've written. Write an earnings report for Microsoft in under 300 words. Okay, because that is what I'm going to be doing for the rest of the episode. Press enter. Oh, right. Now it's telling us an error record. Of course, it does that when we are live. Okay, let me have another go at this. By the way, what's likely to happen is this disappears here all the time. We're experiencing exceptionally high demand. I see that all the time these days. Right, let me go again. Write a 300-word earnings report for Microsoft. Okay. Watch. There you go. Look, see what it's doing. Hands free. It is generating a earnings report for Microsoft. If that is the case, you might ask, Susan, what is the need for you? And okay, as it's writing there, it's doing it in under 3 words, or give or take, it'll be close enough to 300 words, because that's what its task is. And you can see that it has all of that. Now, the challenge with ChatGPT is, no, let me start with the benefits. Then I'll tell you about the challenge. The benefits of this is that it's written exactly like you expect it to be written. Okay, it's doing it, you can see there, it is writing exactly as you would expect someone like me to talk. Pulling in the information, and all is good. And VectorVest said, I'm not counting all those words. But yeah, you can see it there, and it's doing its thing, and it's going to continue on there. And it's right, that's it now, it's done, right? So, and literally, when I look at this, the company's productivity and business processes segment, I will be talking about those types of segments later on. So it looks, and you can see there now, it's just updated my chat to say what it is. It looks exactly right. The question is, can I trust it? Now, I wouldn't trust this, and I'll tell you why, is because if I was to go to ChatGPT, right, because when I come back in here, you'll be able to see it straight away. But if I was just to open it up there again, it will tell me, look at this. It says it has limited knowledge of world events after 2021. So it doesn't trust itself on anything to do with after 2021. Whatever is there, it wrote about 2022, so I don't trust that information. I've asked ChatGPT a couple of things and it's been wrong, but broadly speaking, the way it writes, that's the key thing, the way it writes is very accurate. It sounds like it needs to sound. So you can imagine what this has led to from the point of view, let's say, of educators. So if I have to write an essay around critiquing Romeo and Juliet from the perspective of love and passion and betrayal and loyalty, it can do it. Why do I need to read it? And not alone why do I need to read it, why do I need to critique it? That's the challenge. Well, it's a challenge for educators. Of course, for students, it might say, well, that presents a lovely opportunity. Similarly as well, if I was talking to people from a marketing point of view, if I was to ask ChatGPT to write my tweets for me, maybe it could. Now, I personally would not want to trust them because I want to make sure that it's me that's writing this. But it is pretty cool, as you can see. This is what Microsoft is backing big time. Big time. This is where it's putting 10 billion into this. Because imagine if today I can open up Microsoft Word, and in Microsoft Word, I can press in a template and it'll generate a CV. But there won't be any detail in it. I'll have to populate my experiences and everything else. But imagine, and I don't have to imagine too hard now for this, but imagine if I was to go into Microsoft Word and I was to say to Microsoft Word, populate a CV for me that is tailored for a legal secretary at a big law firm based on recent, assuming that, let's say that this issue wasn't there, based on recent market developments focusing on the most employable skills. Populates a CV and I stick in a couple of things. Away we go. That is ultimately how you can bring Microsoft and ChatGPT. Okay, so I just wanted to start off with that. Okay, so Sash says, because I see Mark there wants to know if I've answered the question. I haven't for a start. How long will it take the VectorVest software to reflect these earnings and changes to earnings trend, calculate or VRS, etc.? Thank you for asking that question. And when it comes to that question in the US, the answer is right up here. Is that real time? Now bear in mind that tonight, when this information is released into the market is closed. So for this to be reflected back in, is that as when the market opens again, that is when we can see that being reflected, which is of course the time that it's reflected in share prices. Okay. Let me see who else. Fitz says, love Southwestern Ireland. Tralee is home to Fitz. Yeah, I know exactly where you're talking about. Maria said, think about making people lazy. During my college days, I did a lot of research. Now AI can do it in such a short time at our expense. Okay, Maria, interesting point, right? And I have thought about this. I have. Then again, I remember when I was studying accounting in school, because then I went on to study it to the nth degree, which is the reason I'm able to show you how to read an earnings report today. I studied accounting to the nth degree when I was studying my CFA exams. Anyway, I remember that they introduced the calculator the year before I was sitting my first accounting exam, and they said the same. Oh, well, now if students have to add and subtract themselves, well, then is that taking away some of the element of actually getting the accounts right? Now, in my opinion, absolutely not. It was taking out repetitive tasks, because the ability to add two numbers together doesn't reflect your ability to analyze a set of accounts. And I know, Maria, I'm not comparing like with like. I know I'm not. But what I am saying is that I personally don't always show GPT to some of the students that I am dealing with, in case that that it's jumping too quickly over the learning journey. But I think we will find our way. And also, critiquing what's there is also really, really important. Okay, now, let me go back here now. Does the data not come from FactSet in the USA? Okay, Andrea, if you're asking me this from the point of view of VectorVest, it comes from Reuters. And let me see now. Bill says, is Tesla a buy before earnings? And Jazz says, yes, they are building more and more. Okay, I will just tell you right now what they are. So let me just go to Stock Viewer, and then I'm going to get straight into the press release and into the depth of the Microsoft analysis. Okay, so let me take a look here at Tesla, TSLA. Tesla Motors is currently a hold. Now, why is it a hold here from VectorVest's point of view? I've spotted it already why it's a hold. Let me explain how a stock, it's a buy recommendation for a start. A buy recommendation is when the price is above the stop price. So here you can see that Tesla's price is currently 143.89. I know to any of us that used to be Tesla shareholders, or some of you may still already be. I used to be one. I'm not any longer. But to any of us, you'll all remember is when Tesla was eye-wateringly much higher than that. But 143.89, the stop price is 143.11. So as you can see there, the price is higher than the stop. 4 conditions is what we need to get a buy recommendation in VectorVest. That's one of them. It ticks that box. Number 2, the VST needs to be above 1. For anyone who's not familiar, this is value, safety, and timing. It is above 1. We tick that box. But it's the next one that it doesn't pass. And that is the RT needs to be above 1. RT is relative timing. It is an analysis of how the stock price is moving. It's a technical indicator. If it's moving up, so that's the direction, quickly, that's its magnitude. And if it's doing so in a very volatile way, it will be at a level of 2. If it's going down really, really quickly and in a volatile way, it'll be at 0. So at 1 is generally quite flat. Overall, since we're looking at Tesla, if I pulled up the graph now, I'm guessing that it is that it's downward. No, I can tell anyway because it's down 1 cent there. But overall, that graph would be trending downwards. I haven't been looking at it, but let me see if I'm right, because I haven't seen it in a while. Yeah, there you go. So there you go. As you can see, Tesla's graph is moving down. That's why the RT is below 1 and pretty significantly below it as well. So it was, in fact, interesting. Now, see about that. Yeah, last tick was at 11:25. It is live, all right. Is that current? It's currently right on the button here of a hold. It was a sell before that. Okay, excuse me. Now, let me see here. Who else we got? Satch says, hi Mark, Susan is not addressed, but we'll wait until the end of the webinar. No rush. Okay, well, I'm delighted you're all going to be here until the end of the webinar anyway. But yes, so the information as it's released is released and factored in real time. Okay, just wanted to mention that. But when the market is closed, well then obviously, as we know, you can't buy or sell anyway. So therefore, the real time is related to the real time of the market. Okay, now let's then get right in to the press release here and webcast, but I'm going to start off the press release from Microsoft. Let's get talking about how we read the earnings here. So at this stage of our episode, I'm going to be translating a lot of information at this point. What I mean by that is I'm going to be taking a lot of these words, people might call them jargon, and I'm going to be explaining what they are. And I just do want to mention that I do want to go back to and just acknowledge again that I will be answering the question, how do you use the earnings report to examine a company's debt level and how it could affect the sustainability of the dividend? I am going to be answering that question as well. Okay, so the earnings release, excuse me, full year 23 Q2 is that this was released, of course, on the 24th of January, namely yesterday. It's been well factored in by the market at this stage. So revenue, so another word for revenue is sales. So sales was $52.7 billion and increased 2%. Now, when you really get into it, particularly when you get into the transcript and some elements of the 10K, then you will really see what drove that, the impact of FX or foreign exchange, the segments. You'll see all of those things, which we'll talk about as well. Operating income, this is the one that I like to look at. Oh, excuse me. This is the one that I like to look at. Operating income is income from operations. Now, let me explain what that is. Let's say that I have a company and my company sells software and I sell software in the cloud. So you can take a subscription to my product and it's some sort of digital services where you log in, you get a username and password. You can use the service as long as you pay for it. It's called SaaS. SaaS being software as a service. And if you stop paying, well, then you stop being able to use it. Now, let's say that that company makes 100 million this year, and that is my operating income. However, let's say that in that same company, I being the company owns a building. The company sells that building for 100 million. That is non-operating income. So operating income is the one that I like to watch because that is the actual business. You can't muddy the water here with selling things that are not operational. And it is a very clear explanation or demonstration of how well the company, the business, the actual business that runs the income, how that's doing. So as you can see here, operating income was 20.4 billion GAAP and 21.6 billion non-GAAP, and that decreased 8% and 3% respectively. Now, that means the operating business fell. Sorry, I'm really sorry about this. I hope that sorts itself out there. Now, this is, of course, one of the reasons that the stock market reacted in the way that it did to Microsoft's response. And when you look at the earning or the transcript, like the conversation is so positive. But of course it is. If I was running a company and I was releasing my press release to the market, of course I would be positive too, because I would be passionate about the company, I would believe in its capability and all that sort of thing. But that number doesn't lie. It shouldn't lie. I'm guessing it doesn't lie. And operating income was 20.4 billion in GAAP. Now, what is GAAP and non-GAAP? GAAP is generally accepted accounting principles. It is the system that is used for accounting in the US, and non-GAAP is outside. So, as you can see here, operating income ultimately decreased 8% according to GAAP principles. And that is, of course, very significant. Now, net income. So net income is basically your net profit. Now, what is your net profit? Well, let's say that again, I'm a SaaS company and I simply sell the subscriptions to the product that I've been telling you about. And then I also sold the building, but I also had to buy a site for a new building, or I had to make an exceptionally large investment in the pension fund for the company, or whatever else might have happened. Way down then at the bottom of that, I have got my net income. This is the actual profit that the company has at the end of it. And as you can see, that decreased 12%, 12% in GAAP terms. Again, quite significant. And then diluted earnings per share was 220 GAAP, 232 non-GAAP, and decreased 11%. Now, this is the one, of course, that investors want. Investors look at two things: earnings and the price of those earnings. Earnings drive share prices. We could see here that the earnings per share, that is what VectorVest looks at. That is what investors look at. Generally speaking, that is what people who are investing in the stock, who maybe not necessarily are overly concerned about the internal workings of the business, are watching. Now, in the case of EPS, of course, that is on the VectorVest system. We don't just take a number like that and then wait for the next quarter. VectorVest instead has a proprietary way of calculating this, which I can show you in a moment, should you like to see it. And just before I go on here, Ellen says, how can we interpret the financial results versus RV or SRT ratings of VectorVest if one does not have the knowledge to read the financial statements? It's a good point, Ellen, and that's why I'm here, is to show you how to read it if you want. It's something that I'm always interested to see. Now, the more information you have, that doesn't mean the better in decisions that you can make. Sometimes when it comes down to make a decision in the market, less is more. In other words, know what you really need to know and take action. I can show you lots and lots and lots and lots and lots. If you could, I'll show you here when we get to the 10Q. The 10Q is 72 pages long in this case, and that's just the quarterly one. So, of course, you can spend a lot of time reading these, but at the end of the day, you do need to take action as an investor. When it comes to using VectorVest indicators, they are going through a huge amount of information and pulling in the data to be able to crunch the numbers and then suggest to you very quickly how to analyze a company. So it's up to you the level of information that you actually want to undertake. I do also want to show you as well. I'll just show you this, and I'm not going to play it. But I'm just going to look at earnings report here, and earnings report and Buffett. This is this one, right? This here is, I was looking at this video. As I say, I'm not going to play it, but it was what to look for to improve company earnings. It was at this, and it was also, there was another one of the AGMs as well that he was talking about. Perhaps actually no, sorry, it was this one, how to read annual reports. About 6 minutes long, and it's quite funny in it actually. And he talks about the fact that you don't need to analyze a huge amount of information in order to make a decision about the valuation of a company. So what I'm doing is that I want to help you to find the information that you want. I want to help you to find the top level information that you might be looking for, but also to get behind some of the language used as well. And let me see here, has there anybody else? Yeah, okay, right. So I think I've answered everything there so far. Right, so the next wave of computing is being born. The Microsoft Cloud turns the world's most advanced AI models into new computing platforms, says Satya Nadella, Chairman and Chief Executive Officer of Microsoft. We are committed to helping our customers use our platforms and tools to do more with less today. That's basically showing you what I showed you, and innovate for the future of the new era of AI. We are focused on operational excellence as we continue to invest to drive growth. Microsoft Cloud revenue was 27.1 billion, up 22%. Now, he picks out, of course, naturally, he picked out the fastest growing segment. When we get into it, you'll see, I'll show you every segment. I will show you everything. But that was the fastest growing one, is Microsoft Cloud revenue. And particularly, we also hear from the CFO, the Chief Financial Officer, as well. And you'll see the way Amy Hopper, she looks at the numbers. But of course, the one that's picked here, and I'm not being cynical, I'm simply pointing out that this is the way earnings reports work. What I'm pointing out to you here is that this one is up 22%, but it's the fastest growing segment. Can I draw your attention to this? Because you'll see this all the time in an earnings report. Is this up in constant currency? Now, the US, without me explaining something really obvious, of course, operates in dollars. On the other hand, Microsoft generates its revenue in lots of places outside of that. And particularly when they talk about LinkedIn, you will see where the fastest growth is happening outside of the US when it comes to LinkedIn usage, LinkedIn registrations, etc. Okay, so when they talk about constant currency, what that means is if you take out the impact of the exchange rate. Now, if you're based in the US right now and you have never bought anything from outside and you haven't traveled outside, you may not be as aware as I am, whereas somebody that does, of course, buy things and gets paid in dollars, but also that travels there. I was there twice last year. So I can absolutely tell you there was a very, very, very strong dollar last year, which of course is brilliant when you're getting paid in dollars, but not when you're using a different currency to buy dollars. So there was a lot of volatility last year. So as a result, you can see that when you take into consideration a constant currency ironing out the impact of foreign exchange, well then the amount taken in from Microsoft Cloud revenue was actually higher. Okay, so now then they go on down here to talk about all of the various different numbers there that we talked about. Now these are the business highlights. Now in here, highlights are, as the name suggests, the highlights. So you can see there they talked about office commercial products and cloud services are up 7%. Again, I won't get into the constant currency now that I've explained it. LinkedIn revenue was up by 10%, but I'll tell you later on who's actually creating LinkedIn accounts, because of course, and I'm on LinkedIn. I use LinkedIn a lot, and I encourage a lot of people to use it in the business world. I don't pay for I don't pay for LinkedIn. I can find that it's perfectly useful the way it is. But of course, there's plenty of other companies who will pay for LinkedIn to share its messages across its brand. Let me go down here. Then there was down here then as regards what was down, Windows OEM revenue was down, Windows commercial products and cloud services revenue was down. Xbox content, interestingly, in gaming was down. Search and news advertising revenue, excluding traffic acquisition costs, increased 10%. Now, Microsoft is behind the browser Edge, and of course it owns Bing, the search engine as well. This was a very big one. They do talk about this in the transcript. Devices revenue decreased 39%. Devices revenue. So, of course, a lot of us wouldn't necessarily consider Microsoft as where I would buy a device. I mean, devices I'm looking at here all around me, none of those come from Microsoft, whereas I'm a Microsoft user every day in other aspects. Now, down here then is where you really get into what the other, if we want to delve deeper, which we will. So quarterly highlights, product releases and enhancements. I'm going to just touch on one thing that I want to draw your attention to. Down here, ESG. This isn't the right show for me to be talking about that. That would be the ESG and Tech show, is where I would be talking about that. ESG refers to environmental, social and governance, as they say. But what I am going to spend some time on is this. This is the webcast details. This happened yesterday. Sorry, not Hopper, Amy Hood, apologies. So we have Satya and Amy Hood, Executive Vice President and Chief Financial Officer. And then we had Alice Yolla, Chief Accounting Officer, Keith Delivier, Deputy General Counsel, and Brett Iverson, Vice President of Investor Relations, held a conference call, and the transcription is what I'm going to take you through as well. Down here as well, you can see they describe what the non-GAAP is, and also then the currency, they speak about that as well. All of these here then are more of the numbers, but I want to move on, and I want to just show you exactly what I look for in an earnings report as well to bring us forward on that. Now, the only thing, let me just pop across over here. So this is the Microsoft SEC filings. SEC is Securities and Exchange Commission, and this is what companies need to always talk about when it comes to this is what they're required to file. Now, as you can see, my background has gone a little bit funny, and that's because the light has gone off overhead. So what I'm going to do is I'm just going to play, because we're live, I have to push pause for 1 second. I'm going to fix that lighting, because that's very distracting to look at. While I'm doing that, and I'll only literally be 30 seconds, please do send in your questions into the chat, and I'll take a look at them right afterwards. Give me 1 moment. And I'm back. I'm back, and now my camera doesn't seem to want to be playing ball. So let me just fix that right now, and I'll see there what is happening with it. But this time I'm not going anywhere. I'm just going to make sure that all is okay from our technology point of view here. That is a strange thing to happen. And I'm just going to make sure that my camera is feeling the love right now. This is where, if Joey was sitting beside me now, he would be able to sort this in a second. But it's a good thing that he has taught me how to do this myself. So there we go. Okay, now I think we are good to go. Okay, yeah, we're back in the game. Great stuff. Now, what I'm going to, just to explain here now, the SEC filing details refer to the Security and Exchange Commission. So when you are a company that is listed on the stock market, you of course are under high levels of scrutiny. And as a result of doing that, what you need to be able to file is to provide a lot of information to your investors along the way. So a 10Q is an example of that. So what I did was I went into the 10Q and I looked at it from a PDF point of view. You can download it in whatever way, shape or form that you would want. 10Q, the clue is in the Q, which is that it's quarterly. 10K is the annual one. Okay, so let's head on over there now to the 10Q. Okay, and over here, I'm going to scroll out here. Now this is, as you can see here, 72 pages. So what I'm going to do is that I'm going to bring you through some of the things that we would look out for. So first of all, I'm going to go to the income statement. Okay, here we go. Now, the income statements, the job here of the income statement is to look at what money is the company bringing in and what is it spending. So it's income minus expenditure to generate the profit. Now, this is different to the balance sheet. We'll get to the balance sheet. But the income statement is over a period of time. A balance sheet is a snapshot on a single day. So as you can see here, we have 3 months ended December 31. So that is for the quarter. This one over here has the 6 months ended December 31. So as you can see, they're two different comparisons. So when we look here, we can see that in 2022, for the 3 months that brought them to the end of the year, the total revenue was 52 billion, and that was higher than the year before. When we look up here, though, we can see that the product was much lower, whereas the service was much higher. So this gives us an insight into where the part of the business, where the money, from which aspect of the business, where it's coming from. Now, I'm going to also mention a term that you're going to see sometimes in an earnings report. It's called COGS, C-O-G-S, cost of goods. All right, so C-O-G-S. So COGS, so it's costs of goods sold. Right, I have, as I always have, poor Joey has to see me do this every time. I have some lipstick here, right? I'm not going to put it on now. There's enough of it on. But let's say that I was selling this lipstick. The cost of goods sold is how much it costs to actually produce the lipstick and put it in here. Now, what I don't include in cost of goods sold is how much it costs, for example, to market this. Or I don't include a cost for my accountant to produce an accounting report as a result of the business. What I don't include is administration staff to organise the shipping of this lipstick. Cost of goods sold refer only to actually the cost of making the product itself. So you can see here the cost of revenue in the case of product was 5 billion, which is lower, and the cost of service was higher. Now, that doesn't surprise me. And the reason it doesn't surprise me is because if we're selling more, I'm guessing that they're going to have to get more product or get more things to be able to deliver that service. And I'm sure you can all guess what they're talking about when it comes to providing a service. And of course, if you're providing a cloud service, you're going to need more cloud, you're going to need more server, etc. We'll dig into that anyway and we'll take a look. So cost of revenue here is in total 17 billion, and this is gross margin. Gross margin is when you take sales or revenue and you take away the cost of goods sold, and then what's left is gross profit. So if I was to sell 100,000, let's say, of lipstick, and it costs me 20,000 to make it, my gross profit is then 80,000. Then I have to spend money on distributing it, marketing it, etc. then we'll get on to net profit. So that's the difference. That's the difference between gross and net. So here in the case of gross margin is margin and profit mean the same thing. Now, sometimes though, there can be words that they don't say, right? They being people like me. So gross, for example, I might say, well, look, the margin just isn't in it. The margin just isn't in that product anymore. That's another way of saying there isn't any profit in that anymore. Or you might say, well, the margin on that was 10%. So then what they mean is gross margin as a percentage of income. That then might mean like gross profit percentage was what I learned that in my earliest days. Now I'm just going to have a look over here to see what people are saying. Yeah, lots of people having chats there among yourselves, which is brilliant, and I love the way you do that. Maria says, thank you, Susan, for your view, but in the case of the stock market, AI will outsmart investors. Will or does VectorVest engage in AI for the software to help us beat the market? Okay, do you know what? It's funny actually you say that, Maria. I've often thought about automation and AI, etc. And in many ways, VectorVest was well ahead of its time, even in the way you can personalize a view and so on like that. To my knowledge, AI is not used, like purely artificial intelligence is not used, to my knowledge, in any aspect of the VectorVest software, to my knowledge. However, the proprietary indicators are and have always been there in order to help people to beat the market, to outperform the market, or to be able to construct a certain view. So rather than use artificial intelligence, we're simply using intelligence and but the scalability of an algorithm to be able to do that. One of the best things I think about VectorVest myself is that it doesn't rely on a person to conduct the analysis. We're relying on an algorithm, which of course has been honed. So therefore it's entirely scalable. That's how in real time, to answer the other questions, in real time, earnings information can be factored into RS, particularly, for example. Okay, so if we keep on going there, the main costs are research and development, sales and marketing, general and administrative. And like I said, this is the one I always watch out for, operating income, because this is referring specifically to running the business. And as you can see here, this fell. So actually, the business of Microsoft generated 20 billion in that time frame, whereas this time last year being Q4 of 2021 was 22 billion. Now, there was other income or expenses. So then there was 60 million here of an expense. I'm just going to make sure I'm right. Am I looking at this correctly? Yeah, it's in millions. So that's 60 million. Now, that could be for something or other that is not to do with the business. I'll be able to take a look at that in the notes, the accompanying notes. So I'll be able to do that as well there later on. Okay, so the income before income tax is 20 billion. The cost of income tax was 3.9 billion. Therefore, the net income for the quarter is 16.4 billion. Now, down here, then we have earnings per share, or basic and diluted, is 220. And as you can see, there's very little difference in between. So you might say, okay, so what's the difference between basic and diluted? There can be a range of them, but I'm going to give you a concrete example. Let me go back again to my startup company, and I'm going to go back to my trusty lipstick here. I would love if Joey was to come and work for my company, right? So let's say that I was to try to, and by the way, if anyone in VectorVest heard me say this, even though I'm live on YouTube, they would not be happy with me. So I promise, hypothetical example. So let's say that I would like for Joey to come and work in my company selling lipstick. I just couldn't imagine it. But anyway, I bet you he's saying lol now in the chat. I might say to him, okay, Joey, look, I can pay you as well as VectorVest might be able to pay you, but I could give you share options in the company. And that means that if we were to go public or if we were to be bought out, then as a result, those options could be worth a lot of money. So the thing is that when you look at earnings per share, well, that is the total amount of profit. In this case, the quarterly amount of profit is 16.4 billion. You divide that by the number of shareholders. So your basic number of shareholders is the number of actual shareholders, but diluted would be if then Joey was to take those shares, because I might just give him an option to buy a share. But if he was to use that option, trigger that option, well, then I'd have more shareholders. I'd have existing ones plus Joey. In this case, as you can see, it makes very little difference. So in this case, we are looking at the earnings per share is 220. That fell from 250 year over year. That fell at the time. And also, as you can see, there was a difference back then. Yeah, there's a bigger difference back then between basic and diluted. Okay, that's the income statement. Now, Down here then, the comprehensive income statement is when we take the net income. Joey says, lol, I'm in. He's so not in. But anyway, right, if we move on then and we look at the comprehensive income statement, what this looks at is when you look at things non-operational. So the net change related to derivatives. So for example, a derivative that a company like Microsoft might have is, let's say that they know, right, because there's a big operation of Microsoft here in Dublin. Very big one, an amazing campus. I've been out there, it's fabulous. And of course, they have brilliant people. I know some of them, and fabulous, right? So let's say they know they're going to have €1 billion worth of wages in euro next year. What they might want to do is to lock in an exchange rate, and they might do that, for example, with a forward contract. Now, that's just one example. Maybe they know that they're going to buy X amount of product in from a certain non-dollar country, and again, they would have a derivative. Net change related to investments. And we'll find out, if Microsoft have investments, let's say in property or in shares or in the pension, etc., all of that then is non-operational. The changes in that is non-operational, and as a result, then what they will need to do is reflect that in the income statement, but not up in the operational one. So overall, like 886 million here, not insignificant, but all the same. And as you can see, then the difference is the comprehensive income is 17.3 billion. Okay, so some of you there are saying, good job, Joey, staying put. I know, don't worry, the lipstick business is fictional. I'm not actually offering Joey to leave, and I don't have share options to offer Joey in a lipstick business either. Hashtag, just saying. Right, now, from an investor's point of view, I feel it is much more important to understand that the company does not make the business, the core business of Microsoft does not make 17 billion. Instead, it makes 16.4 billion in the last quarter. I can also see over here that the business a year ago in that quarter made 18.7 billion, as distinct to this, well, it was actually minus there last year. So I much prefer to see what is happening on an operational basis. Okay, much prefer, personally speaking, because similarly, imagine if VectorVest was to start selling, I've been in its buildings, both in Ohio and in North Carolina. They're very impressive. But you could imagine that if Microsoft sold off a building for 10 million, and then this was to be added to the income statement of the company, it would skew the figures entirely. And it's no different when it comes to this year. So I prefer looking at the operational one. Now, let me just go back now to the question that I said I was going to answer, and that is where? Where's the one about the debt? Oh yeah, how do you use the earnings report to examine a company's debt level? That's where we're going now. So that is the balance sheet, right? So let me scroll on down here now to the balance sheet. Here we go. The debt is tucked in down here. Okay, what's a balance sheet? What a balance sheet is a snapshot in one day. Okay, you'll see here, look up at the top here, 31st of December 2022. On that single day, Microsoft added up all of its assets, and then it took away all of its liabilities. And then what you get at the bottom of that is what the company is actually worth. And that is 364 billion. That is what it is worth in total. Okay, now that's not the same as the market value. That's different. The market value is the number of shares multiplied by the share price. That is the balance sheet value. Okay, so what have we got going on here, right? So the company is more asset rich. So current asset, what's a current asset? A current asset is an asset that you could turn into cash within 1 year. Obviously, cash is something that you can turn into cash immediately because it already is. But when it comes to short-term investments, that might be, for example, a short-term deposit, that 30-day access to money, for example. That if I have a 30-day access account at a bank, that means that I could send an email today, 25th of January, and by the 25th of February, I could get that money into my hand. That, of course, then would be a current asset. So short-term investments is anything you can liquidate into cash within a year. So total cash equivalents, short-term investments is almost 100 billion, and this is down from the year before. So its short-term investments fell. Now, what I can't tell yet is whether that happened as a result of the decline in value of them. Generally, short-term investments tend to be, as the name suggests, short-term. So I'm wondering about that, because if they're short-term and let's say they're money market funds, that wouldn't have affected it. Maybe they have been spending the money on investing, investments, whether it's in their infrastructure or their people. So I can't quite tell on that yet. And then down here, what we have is accounts receivable. Now, accounts receivable refers to the amount of money that is owed to Microsoft. Also, you might know them as debtors, or you might have them as, you know, the invoices outstanding. You might call them accounts payable, or sorry, no, accounts receivable. It's definitely accounts receivable. So that is where Microsoft has done the work and has issued an invoice for it. So this is accounts receivable, and they also have a net allowance for doubtful accounts. So they also then disclose if they think that some money won't be received. Inventory is stock at 2.9 billion there, and then there's other current assets as well. So that's anything else that could be there. If, for example, they have overpaid something, not overpaid, but if they have paid, let's say they've paid insurance in July until next July, well then of course that is a type of a current asset, because if they were to cut that lease short and the lease allows them to get some of that money back, well then that would be an asset because it could be receivable back into Microsoft within the year. Now, after your current assets, then you have fixed assets, and fixed assets is anything that can be turned into cash in over a year. So you have property and equipment here, you've operating lease, right of use assets. Now they have to be recognized as well. A technical description, but it just means that they have an ability to generate money from them over the long term. So let's just leave it at that. Equity investments. Let's say, for example, they have got an investment in my non-realistic lipstick company. So an equity investment is, of course, where they have invested in another company. And of course, an example of that will be what they're discussing at the moment with OpenAI. Now, that is, I have to say, we're not clear yet on the arrangement with OpenAI, but I'm just saying if they have an investment in another company through equity, that would be it. Goodwill. Now, goodwill is what's reflected on the balance sheet of, if you were to take, right, let's say I want to make a different company, right? I make pens this time. So let's say you're looking at buying this company and it makes pens. So we have €1 million worth of pens, we have €1 million in the bank, and we have €1 million outstanding, right? So we have €1 million outstanding, and we're expecting for all that to come in. So the balance sheet value of that is 3 million, right? So we've got 3 million worth of stock, we have 3 million worth of money, and we have 3 million outstanding. And I might sell this business to you for 9 million. And the reason I charge you an extra 6 is because we've got processes and procedures, we've got a client book, we've got a reputation, we've got people who know what they're doing. So that is goodwill. It is the amount that you pay over and above what the actual things on the balance sheet are worth. Then you have intangible assets. So that's like, that would be things that you can't touch, right? So intangible assets would be things like patents, would be royalties, various other things like that. So long-term assets, things that you can't touch. So things you can touch are like property and equipment. They're called tangible. That's me hitting the table to point out that it's tangible. I can touch it. What you can't touch is a patent. So total assets here is 364 billion. Now, back to the debt. I'm just going to take a quick look here. So Maria says 10K comprehensive report is also useful. Yeah, the 10K is a meaty one as well. Thank you, Maria, for sharing that. And Andrea, thanks you too. So down here then we have current liabilities. So current liabilities is anything where it's a debt that is due within a year. So accounts payable there's 15 billion of that. That is where Microsoft owes its suppliers 15 billion at the moment. Now, one of the things that we look at is, for example, a current ratio. And a current ratio is Microsoft liquid. So can it pay what it owes in the next 12 months with what is owed to it in the next 12 months? The answer is yeah. That's because when I look at cash and cash equivalents, it's 99 billion. That is much greater than 15 billion. If I was to take all of the current assets, it has 157 billion of current assets in comparison down here to its, sorry, let me just give you the whole lot. Total current liabilities here is 81 billion. Total current assets up here is 157 billion. Broadly speaking, give or take, quick maths here, it's 2 to 1. It has a current ratio of 2 to 1. That means for every dollar that Microsoft owes in the next year, it is $2, either that it has or that it's expected to have in the next year. That is how we measure liquidity. Current portion of long-term debt is here, so it's going to owe $4 billion back this year. Accrued compensation, now I think that might be wages that it owes to people. Compensation, that sounds like it, or I think that's what it could be. No, it can be different things and different accounting statements, but I think that's what it is. Short-term income taxes, so that's what it owes. Now, for example, I ran the payroll for my staff on the 31st of December. I did not pay the taxes on that payroll until the 4th of January. Let's say that statement was true. Well, then, of course, on this snapshot, on that day, again, there would be an amount of money owed that I haven't paid yet, and it has to go somewhere in the balance sheet. Now, this is the one to watch, though. This is often the one that I look at too, is long-term unearned revenue. So remember up here, I said to you, up here, when it comes to accounts receivable, this is where they have provided an invoice for something, and the work has already been done. Well, unearned income is the opposite. This is where they've gotten paid for something that they have yet to do. I always look at this because if this is very high, I'd always be wondering why. Why would you be charging people today for work you haven't done yet? Now, look, there's a range of very feasible reasons for it. Sometimes it's to do with budget. It is to say, look, we know we haven't got around to asking you to do a certain job by the end of 2022. We're going to give you the money now because it has to come out of last year's budget. And will you do the work next year? Then, of course, it goes in there under unearned income. Now, of course, there can be, questionable reasons why people would do that too. And I'm not going to bring those up now. But the point I'm making is that, again, it has to go somewhere. Let me see what else we've got. We've got other liabilities, etc. And then you've got the long-term liabilities down here. So overall, the total liabilities are 181 billion. So we have 81 billion of current liabilities, 181 billion of total liabilities, and also the long-term debt there is 44.1 billion. Now, can I go back to the question, which is the question you really were asking, was about the ability for the company to pay its dividend, right? Let's focus on that. Now, rather than look at the earnings report, I'm going to pop back into VectorVest to answer this question quickly, and then I'm going to go into depth over here. Okay, let me pop. I know I'm going a bit over time here, but stick with me. I'm going to be 15 more minutes, okay? And that's it. And then please do keep your questions coming. I'm only loving them. Now, I'm going to, first of all, go over here to VectorVest, and I'm going to show you a really simple way to make a determination about the ability to repay or to pay the dividend. MSFP. Okay, here we go. And that is because all you need to look at when it comes to the ability to pay dividends is what is the earnings per share, and compare it to the dividend per share. Because the question one always should ask is, does the company earn more than it's paying me? That's the question to ask. So a simple question to ask is earnings per share greater than dividends per share significantly? The question, of course, then you might ask is, yeah, but how significant is significant, Susan? Okay, and I'm going to talk to you about that. So let me just scroll on over. Okay, and not that one. Let me scroll on over here. And I don't have it. No. So let me just add it in. Right, so I'm just going to right click here, and I'm going to go into my column settings. I'm not going to go into. I am going to go into here, and I am going to go to layout, and what I want is DS. I'm looking for dividend safety. Pop that across, and I'm going to move it up, right up there beside dividend yield. Okay, thanking you. And now let's see. DS, there we go. Okay. Now this dividend is pretty safe. So DS is a measure of dividend safety. It's between 0 and 99. The closer to 99, the safer the dividend. So it's as simple as that. So if I right click here on Microsoft and I get the full stock analysis report, scroll down to DS. Here, it'll give you the full explanation. So DS is an indicator of the assurance that regular cash dividends will be declared and paid at current or higher rates for the foreseeable future. And as you can see here, stocks with DS values above 75 typically have RS values well above 1. This does as well, I checked, and earnings yield levels that are much higher than dividend yield. So this does the work for you. It compares earnings yield to dividend yield, which itself compares earnings per share to dividend per share. So therefore, as you can see, a level over 75 is, which it has. That's the short answer. The longer answer, stay tuned. Stay tuned, because if I go back over here to the press release, okay, and let me go to the press release. Yeah, right down here. Microsoft returned $9.7 billion to shareholders in the form of share repurchases and dividends in the second quarter of the fiscal year 2023. Now that has not happened yet. A decrease of 11% compared to the second quarter of the fiscal year 2022. Okay, I'll go into the NQ and I get it instead. If you simply wanted to, because I'm going through this in sequential order, but if you wanted to find something right now, I'm just going to go into dividend here. There we go. So common stock cash dividends paid. In this case, it was 5 billion. Okay, so 5 billion, 5.066 billion. So 5 billion. Then I would compare that to 5 billion. Back up here, cash. Here we go. So the cash it had at that quarter was 15. So now, of course, it's not going to spend every dollar of cash in a dividend, but as you can see, the cash cover here is 15 billion. So there's a lot of money in the account, and therefore, and even if we was to look at that, the current assets are 157 billion. But what I would not just be looking at is the cash, but also, of course, the earnings. I, again, personally would be looking at the operating income. 36 references to operating income. Here we go. Operating income of 20 billion, and that was in one quarter alone. So therefore, that's how you could do it quickly. Now, sorry, not quickly. That's the second way. And of course, the third way is then if you want to look into the debt itself. And as you can see here, it actually owes more it gave out more in dividends in 2022 than the current portion of than it owes currently in debt, the current portion of debt, which is the next year. So overall, that's why, like, I can look into this. Microsoft's a pretty clear-cut case when it comes to something like this. But if I was to look at a dividend that could be on the edge, I might have more. It would be harder maybe to make a decision. But here, it's got a level of 81. The earnings per share and the dividends per share are quite significantly different. The operating income and the cash balance are both much, much, much higher than the dividend itself. And I can also see that the current portion of long-term debt is also quite low. It's lower, in fact, than the amount paid out in dividends itself. So that's a more holistic view of it. Now, Fitz, does that answer your question? Because that's my answer. But if you want to know any more, please do let me know. And let me see. I'm loving the conversation that's continuing there. Okay, one other thing that I'm going to show you in here. No, two. Okay, one is the cash flow. I just want to show you cash flow. So, did you ever hear the phrase, revenue is vanity, profit is sanity, cash flow is reality? And we can see it all here. We can see it all. There is no press release here. There is no conversation about it. This is simply me looking at the numbers and seeing what's going on. So, just like, let me give you another scenario. So this time I run a company and we took in sales of 100 million and sorry, let me correct myself. We issued invoices of 100 million, an important distinction. We issued invoices of 100 million. It cost us, right? So we received invoices of 60 million. As a result, we have got profit or earnings of 40 million. And I'm now in a position to distribute those earnings per share. Okay, that could be on an income statement. All of that would be correct. Now, if you looked into my balance sheet, you're now going to see a problem that I'm about to tell you about. And that is, we issued the invoices for 100 million, but we only received 20 million of that cash. On the other hand, we received invoices for 60 million of our costs and we had to pay it all. So now, actually, the company has minus 40 million in it. That would be... And that you would spot on the balance sheet. You would, because you'd see that I have a massive debtor book. You would see that the cash is minus. Well, the cash wouldn't be minus. The cash would be zero, let's say. And there would be big short-term debt. I could have a big overdraft. So that's where you would have found it. But you'd particularly, if you looked here, you'd have found it. So here that I can just see, there's three things in a cash flow statement. CFO, cash flow from operations. So this is money that is moving as a result of operations. This is cash flow from financing, which is when you bring cash into the business to run it. So this generally would be if you were to, let's say, borrow money on an overdraft or borrow money on debt, or of course, raise money on the stock market. And then you also have cash from, or cash used in investing. That's if you were to buy an equity or sell a property. So overall, the cash position disimproved. Yeah, disimproved. Look here, the cash at the standing, no emotions, lol. Facts, yeah, money doesn't lie. Well, that's the thing. Now, I know, I mean, look, there's all sorts of things I know you can do with accounts, but there is, it's up to us to analyze these numbers, and it is important to be able to read them. So here you can see here, when it comes to the cash position, the cash and cash equivalents at the end of the period was 20 billion at the end of 2021 and 15 billion at the end of 2022. So that I can see, and there's also, we can see the impact of foreign exchange on cash. Now that's not the same as on suppliers and on sales and everything else, but overall the cash position was less strong. And of course then we can get in and we can look at all sorts of things. Now, as you can see here, I am on page 6. This is page 6 of 72. So the only other thing that I want to show you is, I want to search for the word risk. There is 65 references to risk. Now, as an analyst, you're really taught how to look at the notes and look at risk, etc. Everything you're looking at here, that's all to do with how the accounting is done. Note 2, earnings per share. You can see there it explains everything. But no, I want to look at them. Okay, I'm just gonna look at another one because there's a big long list of these. Market risk. We go now. Okay, what we get here is highlights from the second quarter. I've already discussed those with you. The risks, though, here we go. In here is what you'd really be taking a lot of interest in, is looking at the risks and looking at what they say. But what I'm actually going to do is I'm actually just going to move straight across to this transcript, okay? I'm going to move across to the transcript because I just want to cut through the mustard here. And I want to show you, now this is 32 pages long. It's an easy read. It is an easy read. It's an interesting read. It starts off with Satya, and Satya starts off, and then Amy Hood picks up after that, and then she explains the numbers and they get into the segments. Like I've done at this stage, I have taken you through the high level numbers for the entire business. We could go into segment by segment, but I just want to show you something in here. So he says, oh, that's kind of precursor. Yeah. This is, so a euphemism is when I say something that makes it sound nicer kind of than it is, right? So here's one. Just as we saw customers accelerate or increase their digital spend during the pandemic, now we're seeing them optimize that spend. What that's saying is they're spending less. And we saw that when we saw the impact of the net income and when we saw the operating income decrease. So that's what that is saying, right? So it sounds like, oh, our customers are optimizing their spend. If your customers are optimizing their spend, what he's saying is that they're spending less and trying to make more out of it. Okay. Then he also said they're exercising caution given the macroeconomic uncertainty. That can cover a lot of things. We're talking about risk of recession, rising interest rates, cost of living. Okay, then we talk about AI. Now he said, I'm sure he means convinced here, right? I'm sure that's what he means. I'm convinced that he's convinced, and he means he's convinced. 3 things he says. It's an important time for Microsoft to work with customers, helping them realize more value from their tech spend, so helping them optimize, and building long-term loyalty and share position while internally aligning our own cost structure with our revenue growth. Now, what does that mean? What he's saying there is this is when they say that they're cutting a lot of money, they're cutting a lot of costs themselves. And you've probably heard about the 5% and all of the jobs that are being cut right across the world. That is what he's saying there. Internally aligning our own cost structure means they too are cutting costs. This in turn sets us up to participate in the secular trend. So a secular trend is like something that's really fundamental that is happening, where digital spend as a percentage of GDP is only going to increase. So there will be more money spent on digital. I think, we can all understand that is likely to happen. when we're looking at, let's say, trends in technology in education, trends in technology in the workplace, trends in technology with the Internet of Things. Everything I talk about in the ESG and Tech Show, it's all in there. But let's keep going. So his point is right. I agree with him. I agree with him. But of course, what he's saying is, well, how does Microsoft make sure that they get as much of that as possible? And then he says, and lastly, we're going to lead in the AI era, knowing that maximum enterprise value gets created during platform shifts. So this is when he goes on then to talk about AI is upon us. And as you see there with ChatGPT, and I see it's still, I can see that it's still going on in the conversation here around the usefulness of ChatGPT, is that as AI now, I think that, well, we could just be seeing that moment when AI becomes mainstream, when it becomes, you know, when suddenly everyone Googled something to find out the answer as opposed to fought over it, tried to remember it, looked it up on a book. When the default answer is Google it, have we hit the point where, and it may not be ChatGPT yet, but when we go to AI for the answer as opposed to a search engine to give us a list of results, is that moment here? Satya says yes, and I would be wondering as well. I think ChatGPT has the power to revolutionize what we do in some aspect of our lifestyle or some aspect of a sector. Okay, so he says with that backdrop, of course, he, as again here, as you can imagine, he picks up there on the fastest growing area. Now, I'm just going to briefly, because I know I said it'd be 15 minutes and I'm now over that, but I'm just going to briefly take you through this. What he does here is he goes on down through it and he goes through every single major area in the business. But he does so where he talks about a change, like a development that's happening. He does a very good job of name dropping companies that are using it. And then he also talks about he talks about a business feature. Amy, on the other hand, she talks about the numbers. She gets into revenue growth, constant pricing, all the things I mentioned at the start of the episode. So I'm just going to scroll on down there. So he talks about, okay, when it comes to, what was that one? What was that first one? Yeah, with Azure. Then he goes on to data. Now he goes then talk about, you'll see there, AI. There we go. The age of AI is upon us and Microsoft is powering it. We're witnessing non-linear improvements. In other words, I think, now he's leaving it up to us to figure this out, but I think what he's saying there is that he's saying we are seeing, not embryonic, what's the word I'm looking for? Parabolic. Yeah, where there's our exponential, is that we're now seeing the speed of development moving not this way, but like that. And it'll be interesting to see how that develops. So then he also goes then to talk about open, we have the most powerful API or AI, an important distinction, supercomputing infrastructure in the cloud. It's being used by customers and partners like OpenAI to train state-of-the-art models and services, including ChatGPT, like I showed you. Then so you can see here, this is very easy to read, right? That he name drops. Is that okay to say? Am I allowed to say that? Yeah, he goes on then to say, and look who's using it, A&T and Rabobank. And he goes on then to talk about, so you can see here, all of this is an understanding of what's going on in the market broadly. If I just pop down, I just want to show you LinkedIn, right? He does 365. Now the numbers there are massive, like surpassed 280 million monthly active users this quarter. But look at this one. I thought this was intriguing. Novo Nordisk, and I know that company, they're one of the market leaders in diabetes in particular. Novo Nordisk will deploy Teams rooms to 5,000 meeting rooms globally in our largest deal to date. There are more than 500,000 active Teams room devices, up 70% year over year. Like they are big numbers. But I just want to bring it, Windows, I want to bring it to LinkedIn. Security, big business too, LinkedIn, yeah. Look at this. Look at this. There is 900 million members. 3 members are signing up every second, but I think this bit is interesting. Over 80% of these members are from outside the US. Now, everyone I know in business, as in business, in a career, anyone that I know is on LinkedIn. So I don't know where they're getting all this massive growth. I know in Germany that there's a different platform, let's say, that you might use there. I know if I was in Hong Kong or if I was in Asia, there's different platforms there. But certainly, as regards where I am anyway, a lot of the growth is already there. The newsletter creation is a new feature. I've spotted that. All right, well, somebody brought it to my attention. Skills are the new currency. People are increasing investing in skill building, etc. Then he goes on to talk about advertising. So all of this is great. If you just read this, right, honestly, you would say, whoo, this is amazing. this is brilliant. Now, though, Amy, I'll tell you, let's go to Amy. Amy knows her stuff. Of course she does. Here she is. Thank you, Satya, and good afternoon, everyone. Then she goes straight on, and you can see here the tone changes. I don't mean positive to negative. He talks about aims and objectives in business and how it's changing and who's using it, developments. She then picks up on the numbers. So you can see here the revenue up 2% when adjusted for the charge, gross margin dollars increased 2%. So operating, you see now we're back to brass tacks. Operating income decreased 3% and increased by 6%, and earnings per share, there we go, which decreased 6% and increased 2% in constant currency. So that's where the earnings report then goes on to, is when you get, she basically summarizes what I was going through there. Sorry, she didn't summarize me at all. She doesn't know who I am. But the point I'm making is that when you look at the transcript, it can put words on the numbers. And when you have a CFO talking about them, then she has to pick out the main points there. And there's so much that you could look here when it comes to reading an earnings report. People like me have great fun with it. But I would like to summarize. What I do want to do here, let me bring you back here now to just me and you. To summarize, what I would like to say here is, when it comes to making decisions in the market, like, we can't always take a load of time to do the work that I'm doing with you. Like, for me, like I say, it's really enjoyable for me to read an earnings report. I get a lot of interesting things out of it. You can learn a lot about the business. You really can. There are thousands and thousands of companies out there. Thousands of companies. You can, of course, spend it, like even today, look at the earnings calendar that I showed you at the beginning. There are lots and lots of companies. On Monday, Glenn had a list of 41 companies that were having earnings results. So you could, if you were to just simply consume information every day, of course, you would be worn out. You would be worn out, and you may not be able to make decisions as a result. But that is why VectorVest does the job it does. So what I'd like to do is I just would like to summarize where earnings appears in our analysis of RV, RS, RT, etc. Okay, and I'll be brief on this, and I really will bring it to a close after that. I'm just going to bring you back over here to the program. Here we are. So in here, you can see, if I just scroll right over here, particularly what I want to show you is RS, relative safety. Relative safety is a measure of consistency and predictability of financial performance. Now, in order for you to go and take a look at that in more detail, you can, like everything, I have a short way and a long way to do everything. Up here is where I'm going to find RS. Okay, here we go. RS is an indicator of risk. MSFT has RS at 1.24, which is good. RS is computed from an analysis of the consistency and predictability of a company's financial performance, debt to equity ratio, are you listening to me, Fitz? Sales volume, namely revenue, business longevity, price volatility, and other factors. So that is where you can see things like earnings feed into how RS is looking. Now, the next one, of course, if I scroll on down here, is EPS. So earnings per share stands for the leading 12-month earnings per share. That's why with EPS, a specific earnings per share result, like what we're going to be seeing in Tesla later on today, is not going to be, boom, suddenly it massively changes this, is because VectorVest determines this forecast from a combination of recent earnings performance, traditional fiscal and or calendar year earnings forecasts. So therefore, if there's an earnings surprise, of course, that will be factored in as the surprise is announced. But it's not going to be like a total step change. And of course, the PE ratio, the earnings yield. I'm simply today wanting to focus on how to read an earnings report as opposed to your PE ratio, etc. I'm not going to be able to go into all of that today. But of course, they then are reflected back in there also. Okay, so that is how VectorVest responds to that. So in summary, if you wanted to look at one thing, okay, if you simply wanted to look at one thing and say, look, Susan, you know what? I haven't got an awful lot of time for this. I really don't. Can you just cut through the mustard super quickly? What I would say is there is a reason that we have the VST. The VST consists of value. That's relative value. Relative value being the combination, relative value is long-term price appreciation potential. When we take value and then we take safety, right? Safety is consistency and predictability of financial performance. And timing, that was the one I went through earlier on. Remember when I showed you Tesla? That looks at direction, magnitude, and direction, magnitude, and dynamics of the share price. That's T for timing. Put all those together. You've got fundamental and technical. You've got earnings. You've got valuation. You've got the whole lot. Scrunch all that together and you've got VST. So when you open up the stock viewer, at the very beginning, then what you can see here is simply the top 10 stocks ranked in terms of VST right now in real time. Just so that I'm absolutely sure, the last tick was 12:25 that in Eastern time. That is precisely. Oh, Maria's absolutely right. She said, don't forget growth. Thank you, Maria. Thank you for not letting me forget that. The light's gone off again. Anyway, we won't worry about that now. So what I'm going to do is I'm going to right click. I'm not going to right click. I'm going to scroll to the right. Just don't like distracting you now when I look a bit strange. You know what I'm going to do now? I'm going to take me off the table. Aha! Now, that'll stop distracting you. So, by the way, this is what Glenn is always worried that Joey will do for him. And now I'm doing it for myself. But anyway, let me scroll on over here. GRT. Maria, you're so right, and thank you. GRT is the growth of earnings. If I right click and I pull up a full stock analysis report, there you go. You can see here GRT GRT reflects the company's 1 to 3 year forecasted earnings growth rate per year, and this is ACLS, which is the top VST stock, and it is a forecasted earnings growth rate of 28%, which VectorVest considers to be excellent. So as you can see, this is not just the current earnings, but the 1 to 3 year forecasted earnings growth rate in percent per year. Okay, thanks, Maria. Do you know what? It's absolutely brilliant having people on this show who are basically like mini Joys. People who help you out. People who just help you out as you go along. Okay, so at the risk of distracting you there now again, I'm going to put back on the full camera scene. And okay, I know this looks a bit funny, but anyway, so I just want to say thank you so much for being here. Thank you for being here at the first episode of the Savvy Investors at VectorVest. My next one is going to be in February. Let me tell you what I've got in store there. I don't think this has been done before, for a start. I am going to interview Steve Chappell. The reason I'm going to interview him is because I have seen Steve operate on his feet, training people for years. He is brilliant at it. And what I'm going to do is I'm going to talk to Steve like you've never seen him before. I'm simply going to talk to him about how people learn. I'm going to ask him tough questions like, what are the biggest mistakes that people need to unlearn before they can be successful in the stock market? I'm going to ask him about funny stories that have happened over the years. I'm going to ask him what his favorite learning tips are. If you really want to learn about the stock market using the VectorVest system and just life lessons in general, make sure and come back next month. So if you like today, please do like the episode. I am always happy to see the comments afterwards. Well, usually, anyway, happy to see the comments afterwards. Please put them in there. I'm only delighted, as I say, to respond to them. And until next time, thanks so much for being here. Thank you all for your interaction and everything else. Happy reading your earnings reports. Bye.
You